And here we go. Okay, Washington County, Southern Utah real estate, Q1 of 2022 market update in just a few minutes. Let's see if I can do this in under 5 minutes. We're gonna focus on 3 specific things. First, supply and demand, affordability, and then what do we do next? And really at the end of this, we have to determine, are you a buyer, are you a seller, or are you both? Maybe you're just a little interested in the investor side of it. It doesn't matter. Let's look at the real estate market as an update here in Washington County, because real estate is local and it's your personal economy that is impacted by what's going on right now. All right, so supply and demand. What is supply and demand? If you want a more in-depth understanding of what supply and demand specifically is, I got a video here. You can click on the link below or in the comments. I also have them on my YouTube page or Facebook or wherever. However, supply and demand is measured specifically by the absorption rate when it comes to real estate. But what we see in this chart specifically is that back in 2020, we had a steady decline of the absorption rate over the course of full 12 months. Now, we went from a peak of about 3.1 months of inventory down to the bottom or the basement of about 0.8 months of inventory. Now, that is crazy. When I first got into the business in 2015, the typical absorption rate was around 5 to 6 months, right? And we'd go a little bit lower than that, but really a healthy equilibrium of supply and demand is around 6 to 7 months of inventory. Now, that's historic. But now, as we've gone so far south in the quantity of supply that we have in Washington County in comparison to the demand, equilibrium is way off. So now, flash forward to today, 2022, which is this other chart, you can see how the trend continues. We started to see it progressively raise over the course of 2021, March, June, July, August, September, October, and we peaked at growing absorption rate. So we had basically 2 full quarters of a growing absorption rate, which was great because that's a reprieve from pricing. Pricing isn't going to have high pressure going up. But after October 21, it started to come back down again. Now we've had our first full quarter of 2022 of increased absorption rates, peaking out at 1.2 months of inventory. It's still a really heavy seller's market. So if you're a seller, it's a great time to sell. It's probably the best time to sell in the history of real estate in Washington County. And what's to come, we're going to keep going on that. Okay. So absorption rate, supply and demand, it's out of whack. We have upward pressure on pricing. That's still the case in April or May of 2022. It's May now. May of 2022, prices are still going up. What does that mean for buyers? Now, affordability is the next topic we're talking about. So let's put it into perspective. Inflation, affordability, car, gas, house, wages, okay? And this chart compares 1989 to 2021. Now, why do we look at 1989? Well, back in the late 70s into the early 80s was the last time we've seen this kind of inflation going on in the economy. So we want to look at what is the most comparable time that we can look back in the recent history and say, okay, let's get some perspective here. Back in 1989, a car cost $15,000. In 2021, $46,000. This is the most important one because we were running out of time. $94,000 was the median price of a home in 1989. The monthly payment was $825. Today, the monthly payment of a home in 2021, this is 2021, so this isn't even what's happened in the last quarter, which is the most important part of this whole video. The mortgage jump goes to $1,455 per month. So median price goes from $94,000 to $346,000. That is a massive increase, 58% jump when adjusted for inflation. That's real money, right? That is why people are feeling the pinch. Let's look at median wages. $9.80 in 89, $25.90 in 2021. Crazy stats. Now let's get into the Utah County or Washington County specific stats, okay? Median sales price, now this is as of March, we're just looking at Q1, as of March, we went from, in 2021, the median sales price, sold price of a home was $451,000 year to date. This year, $595,000. That's a 31.9, let's call it 32% jump in appreciation. Okay. Now back to affordability. What are the three factors that impact affordability? First is median price sales. The second is mortgage interest rates. The third is wages and how much our community is getting paid. Okay, those are the numbers that are going to be impacting the housing market and something we're going to want to stay in touch with. So the housing market has jumped significantly in a rolling 12-month period of time. It's something we want to keep watching. But with the interest rates rising just over the last quarter, up until about 2 weeks ago, they had been increasing every single day for 6 weeks. They went up every day. Mortgage rates went up. Okay, let's get there to in a second. Median sales. Let's look back in time. Go all the way back to 2012. It looks like just under 200,000. There's a pretty consistent trend line right there. However, if you look right there at the very end, you start to see Utah, the entire state, and the Washington County start to split off just a little bit in that rolling 12-month calculation. And it's going up real fast in Washington County because we are not building enough homes. That's the true facts. We're not building enough homes. As much as you want to say we're building too many, we're not caught up. Chem Gardner Institute, and I'll pull that up here in a little bit. Chem Gardner Institute said that we're 44,000 home starts short in the state of Utah. 44,000 people should have a home that do not have a home, and they're bunking up, and millennials are living with mom and dad, and there's multi-generations living in one dwelling, okay? 44,000, that's a real number, Chem Gardner Institute. That's important because it's going to continue to impact pricing, okay? Mortgage rates, let's look at that. As of today, it's probably over 5.5% APR is what you're going to be qualifying for in the next 30 days or so. It potentially could keep going up, right? It's hard to have a crystal ball exactly what it's going to do, but here's some history. The historical average from 1972 to 2020 was 7.8%. So we're still significantly under the historical average. Go back to the 80s, as you can see in this graph right here, 16.63%. Wow, you can't buy a house at that time. And that was at the tail end of one of the highest inflated areas or periods of time in the U.S. economy history as well. So purchasing power has gotten cut by 25%. Let's say you qualified for a $500,000 house back in December. If you were to go get qualified today, you'd probably be qualified for around $375,000. That is a big jump in what you can actually find when you pull up the MLS or you pull up whatever website you're going to and look at homes. $375,000 doesn't get you much. That's the truth of it. You might be able to get a townhome, maybe a 2-bed, 2-bath, probably a manufactured home. That's about it for when just 4 months ago you could get a $500,000 house for the same qualification. That's crazy. That's the reality of what's going on in the market. Affordability. We talked about median sales price. We talked about mortgage rates. The last thing is median income. Now, not a whole lot of statistics on median income. The bottom line is this. You know as well as I do is that wages are not going to keep up with the speed of the appreciated values of homes and the inflation of what's going on with goods and services. Wages historically lag behind. So who is that going to disenfranchise? The bottom half of our economy, the very bottom half of our income earners, right? Our average median income being what it is. The bottom half of those earners are going to be impacted the very most in Washington County. So you have friends, you have family, you have kids, you have people that you know that are going to be impacted by inflation, rising housing prices, and also the mortgage rates going up. Those three things are going to impact that part of the community, and we got to do what we can to support them while we weather this storm because it is temporary, okay? 25% in purchasing power in over the course of one quarter. If I'm a seller and I misprice a home and don't get an offer on it in the first 14 to 30 days, you're probably going to get less money than the guy down the street that listed it in the market for the actual market value of it and got multiple offers on it and got top dollar. Because the harder you shoot for the top, the more likely you're going to take a loss on what you could have gotten by pricing it in the market. And that is the truth. I can see it I could show you a little bit more detailed. If you want to schedule a time and consultation, I'll walk you exactly through how you get the very, very most money for your real estate when you sell it with me, and understand that these dynamics, you could still underprice your house even in this market. Buyers, affordability, supply and demand, what do you got to do? We just got to get in the game. Let's reset our expectations, get in the game, get with a real estate agent that says, okay, over the next 12 months, what do I have to do? Do I need to get some more income? Do I need to pay down some debt? Do I need to get realistic with what I can afford and actually just go get a piece of real estate? Because over the long term, when you look back 4 or 5 years from now, you're gonna be like, dang it, I wish I would have bought in 2022 when they were all saying there was a housing market bubble. Because right now, there's no bubble. We have a long road to go before something like that happens. Rental rates. Oh, we talked to buyers. We're gonna talk to sellers. Sellers, best market in the history of time to sell your house. Specifically to this seller right here. If you are a just about to be empty nester and you have a house that's 36,000 or more square feet, it is the best time in history to be downsizing. The interest rates going up, coupled with this moment in time over the next 12 months, you can go down in size and get a bigger bang for your buck because of those interest rates if you have significant equity, which a lot of you do. I know a lot of you do. So if you're downsizing, you're going from a massive house that had a bunch of kids in it and now they're not here and you don't want all this maintenance, and there's another dream home out there for you, now is a great time to really seriously start to look at it, because down the road in the next few months, it's still gonna be more difficult to buy something new. So if you wanna leverage fairly good interest rates, if you're looking historically, because if I'm looking down the barrel of a 9% interest rate in 2 years, that's a little bit higher than the average, but I'm looking down that, I don't wanna be buying that, right? You deal with what you know, not with what you're guessing. And right now, even 5.5% interest rate is a great interest rate. So if you got lots of equity, you get a great bang for your buck home, and your mortgage isn't going to be a big pill to swallow as you're getting into that retirement stage of life. So if you're a seller and you fit that criteria, please call me. I would love to take care of you. I'd love to show you how I can get you more money than any other real estate agent out there. I got lots of experience. I can show you exactly that. Now, let's talk to the investor. The investor in the market is looking at that and saying, what should I do? In my mind, a good deal is always a good deal, right? Buying location. Looking for remodel opportunities, I think it has a big upside to it because they are still getting a discount in this market. And rental values in Washington County are out of control. So rental prices are going up. And if you look at this chart right here, the average rental rate yearly in the state of Utah has basically never gone down. Never. From 2006 till now, it's never gone down. So you're getting an appreciating asset. You're getting a cash flow. You're getting rents. If you lose a renter, you lose a renter for a small period of time. The only time that it had gone down from 2008 to 2010, it went from $793 to $720,000, followed by just the following year of $754,000, went right back up, okay? And by 2012, they exceeded those of 2008 rental rates, right? Really small window of time and a really small percentage of adjustment when it comes to rents. Investment real estate is the best way to get your financial and wealth management off the ground with a stable foundation, and then you can go invest in crypto and all those other NFTs and things like that. But real estate is the best thing to get into, and if you're an investor, you already know that. It's still a great time. Rental rates in Washington County are still going up. In my mind, think small. Think 2-bed, 2-bath, big bang for your buck on 2-bed, 2-baths. Or there's some vacation rental markets that I think are still going to be a little weatherproof as the economy shutters. But there's still some great opportunities here in Washington County if you are an investor. Okay, guys, I think that wraps up majority of what we're going to talk about. There's an economic crisis going on because of world events and all that, blah, blah, blah. But I'm going to wrap this all in just one little bow here. I appreciate you sticking with me. The real estate market in Washington County is historical and different than any other time. So what does that mean for me? I've been in real estate 7 years. I have just as much of an advantage of somebody who's been in this industry for 30 years as somebody who's been in this business for 7 years, because it's unlike any other time. Find a real estate agent like myself that understands the market, that can get you the most money if you're a seller, that can stick with you if you're a buyer and really get you the service and expectations met to getting you into that next house. And if you're an investor, let's definitely talk, because there's lots of opportunities in Southern Utah and lots of money coming in from all over the world. In Hurricane, Sand Hollow, the city of St. George, we have Desert Color, we have Black Desert. There's tons of investment opportunities here, and I would love to help you out. The market's going to keep going fast. Homes are still going to appreciate. A bunch of the buyers are going to be eliminated from the market. About 25% of the buyers are going to be reduced from the market. But when we were getting 10 and 15 offers, that's still multiple offers on every home. Stick with me. Let's do a quarter two in just a couple of months. And if you have questions, please reach out to me. You know how to get a hold of me. See you guys.